Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Friday, June 11th, 2010. This morning we're talking about consumers disappoint. Well, so much for that. We got great economic news yesterday coming out of the Asian countries in Australia and New Zealand, basically pack rim. But now today we're seeing that U.S. retail sales figures have disappointed. They were expecting a gain of 0.2%. It actually came in a loss of 1.2%. And these numbers show that that economic recovery is still fragile here in the U.S. and that the consumer is not yet back to levels where it's going to be a sustainable recovery going forward. Now, part of this is due in part to the fact that people are saving more. There's still uncertainty out there, which that's not a bad thing. But the other part of the equation is that we still have really bad employment figures. I mean, the employment rate, the only reason it's staying the same is because of discouraged workers who can no longer claim unemployment. So unless the government does something to really provide an environment where private sector businesses are going to start hiring, we're going to see this happening for a long time. So just taking a quick look here at Aussie USD. Okay, you can see what happened right here, right before the number came out, just a sell-off, right ahead of 85. All right, and then boom, just boom, sold right off. We'll see the same thing with the Kiwi. The Kiwi was actually higher when I started writing this morning. I know it takes me a little while to write these things, and people think I'm crazy by the time I'm done. But the Kiwi was actually higher, and that was after people digested the report yesterday, the economic figures that came out when they raised rates, and they're saying that that there's a accelerating growth happening there, and there's talk that inflation could be double. So we could see a series of rate hikes happening in New Zealand. Now, the other canary in the coal mine, so to speak, is China. All right, they came out with their inflation figures, and the official report showed an increase of 3.1%. Rise in consumer prices, which is the fastest rise we've seen in over close to 19 months. So Secretary Geithner came out. He's trying to put the heat on him, and he's saying, look, Chinese exchange rate policy is preventing a balanced global recovery, and it's causing that inflation. And of course, China's saying, no, we will do our policies, and that's it. So, something's going to have to come to a head here, and we're going to see. But that's, the other reason why Aussie and Kiwi are taking it on the chin a little bit, because there's some uncertainty over what China's going to do to their currency policy. So that's what's happening there. We've got the pound is lower across the board. Okay, they came out with some industrial production figures, which manufacturing was weak. All right, now this is coming ahead of expected budget cuts in the UK, so folks are thinking that maybe the economy is still a little bit too fragile to enact these budget cuts, but it just has to be done. So we're going to see what happens. Now there was a survey out of UK consumers, and they're predicting that inflation is going to rise to the highest levels in over 6 months, and I'm thinking that this might be a case of where the consumer is not always right. So we're going to see what happens there. We've got dollar is stronger on the risk aversion, and we've got the the sales numbers showing that there is risk in the market. So, going into Fridays, we see a lot of times people don't want to hold these risk assets over the weekend, and that's primarily because of what's going on in the Eurozone. We've still got these debt issues over there. There's potential landmines hidden throughout the whole region. So, in addition to the bad numbers, you've got people saying, maybe I don't want to hold these risk assets over the number because, maybe something pops up in the Eurozone that I wasn't expecting, and there it is. So that's what we're seeing here in the market. We've got risk aversion today, sell-off in the risk assets. Yen is higher as the carry trades unwind, as people fly to the safe haven of the Japanese yen. So what today's really showing is today's just an example of how bad government policy can distort economic figures and to get everyone drinking the Kool-Aid. People shouldn't be surprised that retail sales figures are down. I mean, one of the largest components of that figure that was down the most was building materials, and if it makes sense that the government's going to be pulling away this first-time home buyer tax credit. So, why are people going to be building houses now? Because they're thinking that demand's going to be lower, so you don't buy building materials. Boom, guess what? There go your retail sales figures. So, it's interesting to see how people, look at these things in sort of a vacuum, if you will. And they're not really looking at the overall big picture. Now, the overall big picture is that we still have bad unemployment, and right now we've got the government hiring census workers. They've got this government bureaucracy going on, but we're not getting jobs from the private sector. And why aren't we getting jobs from the private sector? Well, it's really quite simple. Right now, this current government is creating a hostile environment for business, and they're doing that with the threat of increased taxes. Now, every politician will tell you, no, we're never going to raise taxes, but when businesses see the massive amount of spending going on, they realize that someone's going to have to pay for it. And, today we're not raising taxes, tomorrow they may be, so there's a lot of fear there. Also, there's increased, fears of increased regulation. If you were an employer, would you want to be hiring in uncertain times like they are right now? No, of course not. You wouldn't. And, a lot of this is coming out of this political backlash that we're getting from this BP oil spill, which, don't get me wrong, it's a complete disaster. It never should have happened. It's a tragedy on so many levels. But, you can't take this populist anger and turn that into government policy. I mean, there's going to be, if they continue to push ahead with this oil drilling offshore notion, there's going to be a lot of people that are unemployed as a result. We're probably also going to see higher oil prices. So, these are things that happen that we have to pay attention to as the government sort of reacts to the flavor of the month or the day, if you will. So, right now, the U.S. consumer represents some 70% of GDP here in the U.S., and if they don't get jobs, we don't start seeing jobs recover, then people aren't going to be spending. And if people don't spend, that's going to dry up demand. And if demand dries up, then that's going to cause prices to come down. If prices come down, we're going to be in this deflationary spiral, and that's going to bring us to the dreaded double dip. So that's what we're looking at today. It's not a pretty picture in my eyes. I just mentioned that the only double dip I want to see is one that's sitting on top of an ice cream cone. So that's what we've got for this weekend. Expect to see a market to continue to trade here. I don't expect to see any aggressive risk taking to pull back from these levels. So that's what we've got for today. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.